All right, I'm going to go through again another quick recap, but I'm going to try and fit all the information that I've learned from this session into one um, recap because I think I learned a lot off of today. And again, I should have had a win. Um, I wanted to see what happened what happened in the market, or exactly what I wanted to see happen in the market happened. However, I wasn't certain because of certain confluences that I learned today, but that is kind of a BS reason because um, why? Because I think that I know that an SMT is supposed to like hold significance in like an area like this. However, I just didn't take it because for some reason I was just hesitant, and now we are going higher. So I want to excuse ES, and I'll bring it back over when we actually have something of importance that I want to talk about. So going on my daily time frame, that's where I started off from because I saw that we had kind of a little move lower. We can bring ES back in to display. We had this SMT, a little crack in correlation, and price decided to move up. Why is this a big deal? We took out liquidity, sort of, in this daily fair value gap, and this new week gap as well. We basically created an SMT. So, what do I want to look on the 4 hour? What does it look like on the 4 hour? We have this SMT, huge rejection wick, printing candles higher, and we look like we are very bullish now. Again, don't look at ES. I kind of wanted to get my analysis from scratch, what I went into looking for into the day. So now I'm like, hey, all right, this 4 hour gap could be of significance. That's where I want to see price pull higher towards, and we are kind of moving up very slowly, as you can see. So let's go into the day bullish. All right, now on the 1 hour, you go kind of by like you go by like synchronized, I guess is what you can call it. But again, I see that we have these 1 hour gaps, this liquidity down here. I can see that we're kind of respecting this. We're printing another rejection wick. So what does that tell me? This low is protected, or not even protected, but it is showing that price is very bullish within this hour candle. So I go down to the 30-minute, and what do I see here? I see that price swept out this liquidity, which is technically, again, a protected low. I'm learning this stuff. I should know this. No one really taught it to me while I've been learning for the past 2 years or whatever. But again, I think that these little things I'm learning is going to be a breakthrough in my trading. Again, this is a protected low. This reacts like this. Now, what do we see here on the 30-minute? We have this FVG. Again, this compared to this, I'm very bullish still. As you can see, we have no reason to really go lower. We have these prominent low that just got swept. So we only have 3 lows compared to all this low resistance in this previous day high, while kind of creating a moneymaker buy model with this SMTs at the low. So again, I was very bullish going into the day. However, I still marked out London high, London low. What did I wanted to see when I saw, now I'm going to go into the 15-minute because honestly, I like the 15-minute better than the 30, but you can still get an analysis off the 15. And yeah, in regards to this price action, I'm going to try and scoot a little bit. I wish both would just synchronize, but again, what do you see here? You see this stop rate inside of this 15-minute gap. Sorry, just schoolwork. But then again, protect the low inside this 15-minute gap. What did I want to see at the beginning of the day? I wanted to see price remanipulate this 830 low to then go higher, because then both assets are tapping into this 15-minute gap. You need to stay in regards of price. So what am I doing? I marked out London high as a potential target, maybe even this as a potential target to maybe go lower to these conditions, to London low. So again, I marked out this London low, 15-minute gap. What was I wanted to see? I wanted to see price either trade higher to then go lower, or price to trade lower to then go higher. So what do we get? We get price to trade lower, higher, lower. All right, what is price doing here? Again, we're just generating liquidity. If price really wanted to, I guess, not take this out, or to take this out right off open, we probably would have just gone off open to rip. However, we want to come back to this point, obviously. If we're generating sell stops here, what can you now do? Now, you go to ES. What am I seeing on ES? I'm seeing London low. Where are we here? London low right here. ES sweeps it up. What does this do? What does this tell me? That we now have an SMT. So this tells me this has basically been swept on the correlating asset. The stop rate right here, stop rate, rejection wick, in the fair value gap, SMT. What are you trying to look here? This manipulation line. What is the manipulation line? It technically is this. This would be your manipulation. Why? Because this is the leg where ES took out the liquidity. Or anything in here. Like, say, if this had a 30-second, this 940 candle, 30-second, you would take that. However, I'd probably take this, the 1 minute, and bang. You're going to run all this LLR. This should be your trade for the day. You should be done. Long position. Again, you're risking a 1-to-1 most likely. Again, I now have a cheat sheet on my I have a cheat sheet now on my notebook to where it tells me what. So say 80 micros, 3. So I'd risk 3 micros here. So I'd risk 3 to end up smacking on this trade. Again, 5 minute, you wouldn't go break even anywhere inside here. Break even, no. In 30 minute, no. Just, there's no break even point. Again, and there's a crack of correlation right here. This 1 minute probably would have been your best bet. So what did I learn from this scenario? If there's an unmitigated gap, you need both to tap. If there's a rejection wick and a protect the low with an SMT in it, you only need an SMT for price to then go higher. So again, that's what I learned today. I'm going to keep that again in mind. SMTs are very powerful. I used to trade with them all the time, but I didn't really know where bias was going. But now it's, again, bias is not even an issue. And again, now this isn't even the trade that I took. It's just the trade that I wish I took, because again, I would have told you this exact scenario if, or I would have wrote down this exact scenario. This is exactly what I was thinking. London low swept, highs off of that, and that's exactly what we got. But again, it's fine. Now what are we gonna do? So this is where I found my second setup, which is a 10 o'clock open high, close low on the 4-hour candle or 15-minute candle. So what do we have in this area? We have price sweeping out all of this liquidity with the rejections out of this 15-minute gap. And we open up a new high time frame candle with the 4-hour. So at 10 o'clock, what do? We open higher, we manipulate. We then go ahead and print this SMT. What does this little SMT even show me? That price is trading already down on ES. We are failing to take out these highs, showing that the buying is now off. Like, no one's buying the market anymore in this area. ES is already trading lower. Now, what do I want to see to confirm that we are going to be bearish now? Because again, I was bullish. This is a nice move higher. We have 5 minutes out of this area. However, they are unmitigated. The 15-minute closed on ES, so it's honestly invalid. Now, what do I wait for? I waited for this CSID or CISD change in state of direction, confirming that we are not going to close back above these gaps. And now we have a 1 minute tap. So now we tap this fair value gap and printed lower, confirming we are bearish and that it's just not a small move that we're making to rebalance to equilibrium to then go higher. So then what am I going to do? I'd probably risk a 1-to-1. I would probably put my stop in where the consequent encroachment of this zone. Why? Just because it's somewhere where price would most likely rebalance to. And again, what did I do wrong here? So at this 5 minute gap is where I should have gone break even. Again, I was thinking that this trade wasn't good, but that's when I need to zoom out and really realize what's happening. We are already done being bullish. We swept out everything that I wanted to see swept out. We have here, this is probably news. However, we have everything swept out. We have SMTs proving that ES is now bearish and it doesn't want to go and reach these highs. And maybe off of a rejection like this, it would. A 5 minute or 15 minute, but we don't even have that. We have it all the way down here. So what is it? What do I want to see now? I want to see price. Bang. And what ends up happening. So right after I see displacement through these candles, I move my stop to break even. Why? I got nervous because I ended up being bullish. Price is kind of close to these highs, and we have but we already took these highs. Like, if both assets didn't take them, yeah, I'd be nervous. But to end up going higher, we even need to see this 5 minute gap get tapped, or even like a higher time frame, just any higher time frame gap get tapped. And we already kind of closed below all these. Again, an 815 is always going to close higher, and then it gives you a lower close. Yeah, this, again, if I'm entering a trade, I put this in my journal. The only time I'm going break even is at a 5 minute gap, 15 minute gap, take profit or really freaking close to take profit, close below like an order box, like this, I would go break even at, or um, like a high resistant high, or just LLR ran with like a gap above. In those situations, I'm going break even, not here. Let this ride out. Like, this is a good trade, but besides bias, this is probably like a B plus trade. Why is it wrong? What are the cons? The targets. You have this and this, two kind of again high resistant, um, high resistant lows with, but you only have one now high resistant high to target. So again, you're like in a weird range now. Your trade of the day already happened. It already played out. You're now just FOMOing really, but that's kind of what I was thinking. I don't think that this is FOMO. If I'm being honest, this is a very good trade. You now have these equal lows and that are forms with unmitigated gaps below. And again, you can always go break even here to then, just go break even there. However, what happened ended up playing out. We ended up going down to London lows because, again, relative equal lows. This trade's all right. Again, I think I FOMO'd into it. If I have a bias, I think I should stick to it. However, you can always go against your bias if you think you're confident in price playing out, which I was. Again, SMT in a 15-minute with a nice reversal. Again, nice rejection wicks, PO3. Cons, your liquidity targets aren't the best. However, by the time price is already moving down, yes, it's already almost at this low. So, yeah. Peace out.